Hello students, today we will discuss a question that came in the Business Studies exam held by the Assam Higher Secondary Education Council. So the question that we have here is, what are the different types of preference shares? Before going to the types of preference shares, we will understand what is a preference share. So it is a type of share in a company that gives their holders certain preferential rights over equity shareholders. They are also called hybrid securities because they combine feature of both equity and debt. So preference share is a type of share. Again, share, what is a share? It is a unit of ownership of a company where certain amount of capital is invested. So shares are also, we can say, the unit of capital of a company or unit of share capital of a company. So here again shares are divided into two types, equity shares and preference share. In here, what is the definition of preference share? It says the holders of preference shares receive certain kind of preferential rights, and the preference share are hybrid securities because they have features of both equity and debt. And why so, we will understand later. Again, preference share that preference shares carry preferential rights in two main respects. What are the two main respects in which a preference shares receives the preferential rights? First is dividend. And how? Whenever dividend is paid on or whenever profit is made by a company, the preference shareholders will always receive the dividend before the equity shareholders. So this is one preferential right received by the preference shareholders. So preference shareholders receives dividend at fixed rate before equity shareholders. The next preferential right received by preference shareholders is repayment of capital. So in case of winding up of a company or when a company shuts down, so when the assets are sold and the money is received, the capital amount or the amount that is uh, due to the preference shareholders is received first by the preference shareholders before the equity shareholders. So it is said in case of winding up, preference shareholders are repaid their capital before equity shareholders. So when a company is winded up, they receive the capital amount before the equity shareholders. So this is another preferential right received by the preference shareholders. So we can say preference shares are those shares holders of which receives the two preferential rights, and what are they? Dividend rights and repayment of capital, and they receive it before the equity shareholders. One example we can say is that if a company issues 8% preference shares, it means that shareholders will receive an 8% dividend annually before any dividend is paid to equity shareholders. So again, in shares, the name of the shares are issued with these kind of names like 8% preference shares. So when a shareholder buys or a buyer buys 8% preference shares, that means he will receive 8% dividend annually, and when he will receive? Before the equity shareholders receive the dividend. Why? Because they get the preferential rights of receiving the dividend first. So this was the concept of preference shares. Now we move to the different types of preference shares. So this is our answer for the question. This will be the actual answer. The different types of preference shares that we have is, the first one we have is cumulative preference shares. And what is it? If the company does not declare dividends in a particular year, the unpaid dividend gets accumulated and is paid in future years before any dividend is paid to equity shareholders. So suppose for certain reasons suppose in a particular year a company did not declare payment of dividend. So when a preference shareholder, suppose he has a 8% preference share, he holds 8% preference shares, but in a particular year the company did not declare any dividend. So in case of cumulative preference shares, that 8% of dividend will be added in the next year. So that particular dividend will be paid in future years. So all those kind of preference shares, where the dividends are added to the next year, when in the current or in a particular year when that dividend was not paid. So those kind of preference shares are known as cumulative preference share, where the dividends are accumulated in the next years. The next type of preference share we have is non-cumulative, and it is the opposite of cumulative preference share, where suppose a company did not declare any dividend in a particular year, then cumulative preference shareholders will not get the dividend of that year in the next year. So it is said these shareholders are entitled only to the dividend declared in the current year. If no dividend is declared, they lose the right to claim it in future. So now in case of non-cumulative preference shares, the preference shareholders does not receive the dividend of a particular year if that dividend was not declared. Now the next type of preference share that we have is participating preference share. These shareholders receive the fixed dividend and may also participate in surplus profit after equity shareholders are paid. So it is another type of preference share where if suppose a company earns, again as I said, suppose a shareholder holds 8% preference shares. So in a particular year, that shareholder will receive 8% dividend. But in case of participating preference shares, after the equity shareholders are paid the surplus amount, the participating preference shareholders get to participate in their profits also. So they will receive certain extra dividend as well from the surplus profit. And those kind of shares are known as participating preference shares. Now the next kind of preference share we have is non-participating preference shares, and that is the opposite of participating preference shares. So these shareholders are entitled only to a fixed dividend and not in the share of surplus profit. So these kind of preference shareholders does not get the part in the surplus profit of the company in a particular year. Now the next type of preference shares that we have is convertible preference share, and by the name we can know these preference shares can be converted into equity shares. So these can be converted into equity shares after a specific period or under certain conditions. So all those kind of preference shares or preference shareholders, they can convert them to equity shares. So those kind of preference shares which can be converted into equity shares are known as convertible preference shares. The next kind of preference share we have is non-convertible preference share, and that is again the opposite of convertible preference shares. That means these type of shares cannot be converted into equity shares. So these cannot be converted into equity shares and remain preference shares throughout. Now the next type of preference share we have is redeemable preference share. Again, what is redeemable? When these are repaid by the company after a fixed period or upon demands as per terms of issue. So if if a shareholder buys a preference share, in case of redeemable preference share, the whole amount can be repaid to the shareholder. So that type of a preference share is known as redeemable preference shares. The next type of preference share we have is irredeemable preference shares. Again, it is the opposite of redeemable preference share. In this case, the shareholder will not get the capital invested by him in return by the company. So these cannot be redeemed during the lifetime of the company except during liquidation. But again, you see, under the Companies Act of 2013, irredeemable preference shares are not allowed in India. This is a type of preference share that exists, but that is not allowed in India under the Companies Act of 2013. So these were the kinds of preference shares. What are the different kind of preference shares that we have? That is cumulative preference shares, non-cumulative preference shares, participating preference shares, non-participating preference shares, convertible preference shares, non-convertible preference shares, redeemable preference shares, and irredeemable preference shares.